Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited today to discuss high income solopreneur, critical considerations for adding a defined benefit plan to your solo 401k. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. If you do have questions on this topic or other unrelated topics, please go ahead and chat it over now so that we can be sure to get to them all. Again, we're back again for our second session of the day. We go live twice a day. We bring content, we answer questions. So we really appreciate you taking the time to join. If you're finding this information to be helpful, please like this video. It'll help us to get the word out to other solopreneurs, other advisors like yourself. It tells the algorithm that the content is valuable. And so that'll help others who, like you, might be looking to secure their retirement future, or help advisors who are trying to help clients, help them get the word out. So again, our goal is always with these Q&A sessions and daily webinars to help you stop overpaying taxes and start building real retirement wealth. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. I want to use my employer 401k as a down payment for an SBA loan to fund the franchise startup costs via ROBS. Well, it's great. Yes, we're not just limited to solo 401k questions. If you have ROBS questions or self-directed IRA questions, we can also field those as well. The franchisor needs the franchise fee paid up front prior. However, can I pay the franchise fee now with personal cash, then reimburse myself later with the ROBS SBA funds? The answer is no, you cannot reimburse yourself. You can pay the franchise fee out of your personal savings. That'll count as part of your personal investment, for which you will ultimately receive stock personally. But no, you cannot be reimbursed. So it'll count as part of your investment. So if you really want to use the ROBS funds to pay that fee, you'd have to have the franchisor just tell them to hold on. And ideally, they can wait for you to fund the business and then pay that fee with the corporate funds, including from the proceeds of the 401k funds that were invested. Possibly you could pay part of it now and then have them wait for the rest. But again, the part that you pay out of your personal savings, that'll count as part of your personal investment for which you will receive stock personally. Okay, great. Thank you for bringing the good question, Nick. Now let's turn to the topic. And again, just to remind you, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. We want to talk about high-income solopreneurs, critical considerations for adding a defined benefit plan to your solo 401k. That's a top scenario that we field on a regular basis. We are a leading solo 401k provider, and a lot of our customers are high income earners, high net worth earners who might be looking to take their retirement savings to the next level with a defined benefit plan. And that's totally acceptable. Our solo 401k plan is totally compatible if someone has a defined benefit plan. Now, we're not a defined benefit plan provider, but we can also introduce you to a defined benefit plan provider. Or, of course, you could bring your own. Now, but there are important critical considerations for that high income solopreneur looking to add a defined benefit plan to their solo 401k. So first, let's lay the foundation with understanding the advantage. Really, it just comes down to being able to contribute even more to really supercharge your savings. So for example, combining plans may allow for total contributions to exceed $150,000 or even $200,000 annually, drastically reducing taxable income for high earners. But it's important to recognize the compliance considerations. So while powerful, these plans interact through specific IRS limitations. Compliance requires careful balancing of employer side contributions. So let's talk about that balance. So in short, in order to preserve the ability to maximize defined benefit plan contributions, one needs to limit their employer profit sharing contributions to the solo 401k to no more than 6% of their self-employment compensation. So if someone makes contributions to a defined benefit plan, that's not going to reduce their ability to make contributions to the solo 401k. But if you go in the other direction, if the employer contributions exceed 6% of the self-employment compensation, then that could reduce your ability to maximize contributions to the defined benefit plan. But keep in mind that there's different buckets that apply to a solo 401k. A solo 401k has the highest contribution limits for any defined contribution plan. So that's available to self-employed individuals. And that's because there are different buckets. So you not only have the employer bucket that we just talked about, but you've also got the employee bucket because the individual is both the employee and the employer. And in addition, if you have an advanced solo 401k plan like the one offered by my solo 401k financial, you can also make a third type of contribution, which is referred to as voluntary after-tax contributions. So individuals are making those voluntary after-tax contributions because they're trying to take advantage of the mega backdoor Roth solo 401k strategy, which is one of the top use cases that our customers are using the solo 401k for. So adding a defined benefit plan, again, does not affect your ability to make employee contributions, nor does it affect your ability to make voluntary after-tax contributions. So it's only that employer contribution limit that would need to be limited to no more than 6% of your self-employment compensation if you want to preserve the ability to maximize defined benefit plan contributions. So in other words, the solopreneur could maximize the employee contributions, the elective deferrals to the solo 401k. They can maximize the voluntary after-tax solo 401k contributions, and that's not going to limit their ability to maximize those defined benefit plan contributions on top of that. So for some, they try to optimize by maximizing the defined benefit plan pre-tax contributions to reduce their taxable income now, but then at the same time, they can still max out their mega backdoor Roth contributions via the voluntary after-tax solo 401k contributions, which is going to maximize the funds that go into a Roth solo 401k. So they can have their cake and eat it too, in the sense that they can both maximize the pre-tax benefits as well as the Roth and post-tax benefits. So that's one of the top considerations, and that's in terms of contributions. Now, there's another critical consideration that we need to bring to your attention if you're a high-income solopreneur looking to add a defined benefit plan to your solo 401k, and that's the filing threshold. So for solo 401k plans where the value of the plan exceeds $250,000, there is an informational filing requirement, which is referred to as a Form 5500EZ. So this is just an informational tax filing that has to be done. It applies once the value of the plan exceeds $250,000 as of the end of the year, so as of December 31st. In that case, that 5500EZ would need to be filed by the following July. Now, the quirk, the thing that's interesting, is that in determining whether the $250,000 threshold has been met, if you have a defined benefit plan, you need to use and consider both the value of the defined benefit plan plus the value of the solo 401k in determining whether that threshold has been met. And if it has, even if the solo 401k balance itself is less than $250,000, a Form 5500EZ will still need to be filed for the solo 401k. So in aggregating the plan values, you use both the value of the defined benefit plan plus the value of all the assets within the solo 401k. So you might have alternative investments. You might have a 401k loan. You might have brokerage account investments. You might have cash, for example. So you might have different participants, right? Like a husband and wife that are both participating in the solo 401k, or different sub accounts like pre-tax versus Roth versus after tax. So the individual, the solopreneur, the solo 401k owner would need to add up all the values of those different accounts, those different assets inside the solo 401k, and then together also include the value of that defined benefit plan to determine whether that threshold has been met. Now, if that threshold has been met, the solo 401k client and or their advisor would need to let us know once the value exceeds $250,000 so we can start to guide them through the 5500EZ filing process. We, for customers of their advisors that let us know in a timely fashion, we will guide the clients. We'll prepare that 5500 EZ in the eFast system, in the electronic filing system, to make it easy for the client and the advisor, so that that 5500 EZ can be filed. And we don't charge any fee for that. So now, again, defining the total plan assets, you got to look at all the different assets, investments, the total outstanding principal on any 401k participant loans. That is another critical consideration for those high income solopreneurs that are looking to add a defined benefit plan to their solo 401k, what some refer to as a DBK. So thank you so much for checking out this content today. If the information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that the content is valuable, which is going to help other solopreneurs like you find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. We also want to invite you to our community. We do have the largest community of solopreneurs, solo 401k advisors, just those that are interested in these topics, with over 30,000 members. We have a vibrant community forum. We have a library of videos and webinars. So there's a ton of ways to engage, ton of ways to learn, ton of ways to share your experience, etc. So please don't hesitate to join. You can join quickly and easily at mysolo401k.net/my community. It's totally free to join. All are welcome. You don't need to be a client. You don't need to be an advisor. You could just be interested in these topics. So please don't hesitate to join. All right, wonderful. Well, that looks like that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this solo 401k community. We'll be back here tomorrow with more crucial content.